Hey guys, it's Brad. I wanted to talk about a few things today. Um, the main thing I wanted to talk about is how to trade stocks right out of the gate. What type of setups you want to look for before the entry. Also, risk management, position sizing, and how important that is. Also, intraday setups and the type of emotional state you want to be in while you're waiting for a setup to come to you and not forcing it. So the first thing I want to get into is pre-market setups and how much volume there should be, what chain should there be, what should the chart look like, what's the history of the chart, the last year, the last month, what are we really looking for? So let's look at CNET for example. CNET is some a China company and a Chinese company, and basically it's ran off Bitcoin extremely high the last month. If we look at the month chart, I think it went to what $11.90, and this was literally in a span of a day or two, right? So yeah, so a day or like 2 days. That's extreme. The float is extremely low, so that's the reason why I did that. So a lot of these stocks are running off Bitcoin news, blockchain news, all that kind of stuff. But one thing you want to do is you want to look at the chart, and be like, okay, where are the major resistance points? So if I were to look at this chart, I would be like, okay, there could be some resistance around here, my first level, 485 or 430. Depending on where pre-market is at right now, you want to look at, okay, this could be support or it could be resistance. So let's say right now, the chart right now is at 490, but this is not pre-market. This is like obviously in the middle of the day. So let's say we're looking at 419. Okay, we have some resistance at 490. We have some resistance at 458. We also have some resistance up here at like 660 or so and 830. So obviously, stocks are not just going to run past these levels just like that. It really depends on the news, the catalyst, how much volume. So let's look at CNET pre-market. This is one stock I traded today. I made a decent sized gain off it. It was $32. I'm Canadian, but I trade American stocks. So it was like around a $40 gain on it. As you can see, I entered at 465. I sold at 480, which was the top of that wick. It didn't go any higher and it shot back down. How did I know this was going to happen? Okay, so as you could see, pre-market, it was obviously like kind of consolidating at these lower levels, but the previous day it went down, bounced up, came up high, so it started to squeeze up, started to consolidate at the lows, and basically, as you can see, pre-market, it started to make higher lows. One, two, three, four. So that red candle right there, right before the market opened, it did make me have some hesitation, but I watched how the market opened because I already set my resistance points. So if I was like, okay, I'm gonna enter if it breaks 460. As you can see, my entry was at 465 because I didn't want it to fake me out. I didn't want it to double top or triple top here because you can see one and two candles hit 460 and bounce down. So I didn't want it to double top. So I wanted to give it some space to show, okay, this is a breakout. This is not going to fake me out. I'm going to get in as soon as it breaks 460. So obviously there was what is it called? Spread. So I had to raise my price up a little bit. Entered at 465. This was let me see. I think I entered on a 5 minute candle, I believe, and it hit 480. Oh, so I entered on the first candle, and it did come down a little bit, but I understood like, hey, the stock is it still has a lot of volume. RSI is still hot. RSI is still looking good. So let me add in the RSI so you guys can understand this. RSI, relative strength index. Okay. So as you can see right here, right in the morning, the RSI it was cooling off. Like it was coming down. So this stock didn't have a lot of strength. That's why I only took a 15-cent gain out of it. Right? Like if I saw that the RSI was hot, volume was going up, but the thing is, volume was actually decreasing. So I made sure my position size was small. I had the a reasonable assumption that this can test 480 again. So I had my limit at 480, got out, sold, made some money. My next stock I traded was GNC Holdings, and basically what happened was I saw that it was great news because literally GNC right now is at an all-time low. Like the thing is, and the float's about 67 million, so it's not that low. You need a lot of volume to move this stock, as you can see. Like, look at how much volume that is on this one little candle. 2.1 million up here, almost 3 million, and the stock, it moved. But like, if you put that in comparison to other charts, man, other charts will skyrocket. So let's look at the 1 year chart, right? It was consolidating at these levels, but on a like 5 year chart, man, this stock has literally went to nothing. Why? Because they have like $1 billion in debt. But I don't want to get into the fundamentals. I just care about the technical side of this all. So let's look at the 5 minute chart, which I was looking at, because I was paying attention to CNET, I was looking at GNC, and I was looking at Archon, and I think Oaks, as you can see on here, Oaks, and there was another one I don't remember. Anyways, so I was able to enter at 4, because I anticipated the 490 break, and it could test $5 because I knew if it broke 490, it had an ability to test $5. So I didn't want to get in at $5, get faked out, and I'm down on the trade already. I wanted to anticipate the $5 break, so I bought in at 490. If it came to 498 and it came down, I would sell for a small loss. But as you can see, like, I can't really zoom in that much, but it did come. It was squeezed, and the thing is, I was very confident about it because RSI was hot here. Whenever you see RSI strong and it's sturdy and it's not really going anywhere, you got to understand, like, this stock still has possibility of moving upwards. Volume was still there, increasing volume. And yeah, so I anticipated the $5 break. I set my target at 505 just because I saw the strength of the move. The move was moving up really quick. As soon as it broke 490, 494, 495, 496. So I didn't sell at $5. I was like, all right, it has some space. I got in at 488, 489, and I sold at 505. That's another, I'd say, 16 cent gain or so, and that was another $40, right? So, it was a good gain. But then look at what happened. So my target for the day is just $100. So $100 US is around 120 Canadian, and that's decent. Like, a lot of people are trying to make $200, $300 a day, but as a beginner trader, I'm a year in. You just want to look for consistency. You really want to just make $100 a day, and that's it. Take some good setups, make some money. It's better to be up than down. So, yeah. This stock really did screw me. The fact that I should have been cautious that the last 1 month or so, it did have a huge run up. But when stocks have a huge run up like that, usually they don't have a consecutive run up to pass that, especially since it's like 5 days or 6 or 7 days apart. If it was like one day after another, yeah, there's a possibility of breaking to new highs. But this stock is already like kind of overbought. People are holding bags. This next run, it's gonna basically be some big institution buyers, a lot of retail buyers, and they're just buying in. But as soon as it hits a certain point, it's gonna sell off immediately because all those people that are in here for losses are gonna take their position. A lot of stop losses are gonna be hit, and it's gonna shoot down. The float of this stock, I think it's 3 million. I'm not sure, or 4 million. I got to double check that. But as you can see, if I look at the 5-minute chart here, let's go to here, Archon. If I go to the 5-minute chart here, I entered on this candle at 349. It hit a high of 350, and my anticipation was the break of 350. You know what I mean? If I took the anticipation break of 340 for 350, then I wouldn't have took as big of a loss. So I around this point it was 940. So I was up around $70 to $80, $90 on the day, and I'm doing okay. My target's $100. I'm doing decent. I just want to get another $10, $20 gain in, and then call it a day. So I anticipated the 350 break on the 1 minute chart because I knew that the previous point was 350, and I saw, okay, I think that this can break 350 and I can sell it for 360, 365. Just, give it some space. What happened was, as soon as I bought it at 350, it actually got me in at 349. This stock sold off immediately. Like, I didn't have any room. I didn't have a chance to get out early. It sold off so quick that I couldn't even, like, I lost like almost 40 cents on the trade. The good thing is like, when you're starting to make good gains, you're being consistent. Now you don't want to, up your size. You don't want to start doubling your position size, because now you feel confident. But the thing is, you don't want all those gains to go to nothing. Yeah, you do have a cushion. Yeah, you should be more confident for your next trade. But sometimes trades like this that are overextended, it's already up in the morning. You got to understand, like, around 10 o'clock, 11 o'clock, these stocks are going to come back down. Like, they get sold off. Like, charts don't go up in a straight line. They go up and they come down. They go up and they come down. So yeah, it touched 350 here. I got in on this candle, 350 for the break. It shot down to 302. I got out at 303, and I just said, oh, I can't believe it. I just lost all my gains. I'm now down on the day. One second, my cat is meowing. Okay, so basically at this point I was frustrated, man. Like, I was very, very upset at myself. I know, like, everything that happens to us, we have to blame ourselves. We have to take full responsibility so we can move on. If we blame anything else, then it's always going to be blaming something else, and you'll never understand how to move higher and get better. So you got to understand, this is all you. This is all your fault. Whatever mistake you make, you got to take responsibility and see what you could have done differently and all that. So you could see, like, RSI was way overextended. It broke past the overbought level, and it just came down. Like I said, I didn't have a chance. This is a 1 minute chart, so these are 1 minute candles, and it came down quick. This is a 1 minute drop, so 301 on that drop is ridiculous. It's a huge drop. Yeah, so that was 3 of my setups, and after that I was frustrated. And then, do you know what I did? Most people, when they're frustrated, they're going to try to make revenge trades. They're going to try to make more money and make up for their losses, because now I'm down about $48 for the day, or $45 for the day, because I took a $100 loss on that. So I literally just sat back for an hour and 30 minutes, 2 hours. No, actually, no, sorry. Like an hour hour and 20 minutes, hour and 30 minutes. And then PZRX came on my scanners, came on here, and I just came on the market movers, top gainers. So I was looking at PZRX. It was squeezing up. It was a nice squeeze. I saw that there was potential for it to move to higher levels, because I was looking at the 1 year chart. There was a gap here, and you know what gaps is? It's a self-fulfilling prophecy that it has to be filled. So the top of the top of this gap, I was assuming that it could touch 90, 91, around those levels, 89, 88 maybe. So I got in at I believe the break of 61 cents, when it did break 61 cents for the first time, which was down here. So you could see I got in at 61 cents. I got a partial fill. I wanted 1,500 shares. Only did a partial fill. I just canceled the rest of my order. I said, forget, because I really don't know where this is going. I'd rather just take a small size. So basically, I got in at 61 cents. It broke through 61, shot up to 71. I wasn't able to sell my order because the mix up with the partial fill, and I didn't realize that it was partially filled. So I had to readjust my orders and all that kind of stuff. So I ended up getting out at 66 cents, and it did end up coming down. So it was a good trade. I made $30 back on the day. I'm now down about $20 on the day. So I was then, taking it easy, relaxing, and then I came over to GNC. My anticipation was the break of 482. Yeah. So it was the break of 482, as you can see here. Where was my entry? Okay, so I got a second entry here. My entry point was supposed to be at 482. That was my anticipation break. of $4.90 to $5. If it broke $4.92, then I would continue to $5. But if it hesitated, sell short. The thing is, I was actually doing something and I was kind of occupied with my time. I should have been focused. I got in late, entered at 486. So when it came up, tested 492. It hesitated a little bit and it kept touching. It touched 5 minutes, 10 minutes, 15 minutes. Those are 5-minute candles each. And it came down. As soon as it broke past, I believe 484, I wanted to get out. So with some slippage, I got it out at 479 and it ended up coming down to 463. The thing is, my strategy was correct. The anticipation break of 482 was a good strategy, but the timing was wrong. The timing was off, and that's okay. You just got to understand that. 467, it came back up, broke 482, came back down, tested 486, and broke that $5 level. So that's 100% fine. RSI is pretty good, and volume is steadily increasing. So the thing is, you want to just take your time, take it easy. Don't force the trades. Just, have a tight stop loss, especially when you're having bigger size, and just stay confident. Like right in the morning this morning, my internet, like 5 minutes before the market opened, I had everything set up and my internet stopped working. I was just like, are you fucking kidding me? Like I was super frustrated. So I tried to calm myself down. I put my music in my ears and I started to focus. I said, okay, calm down, relax. Let's focus. Let's get my mind right. So I started looking at some trades. I started putting a bunch of stuff on my screen, and the day was ending up good, but obviously that one trade that took all my profits kind of set me back. PZRX, partial fill, bring me back up, but at the end of the day, what ended up happening was I re-entered. I should have took it off my scanners because I made a lower high, even though it was trying to retest previous highs. It was a bad entry. You see, like, it tested 69 cents. I should have seen that and said, okay, it didn't try to break 71 cents. RSI is decreasing, volume's decreasing, everything's decreasing. This is bearish divergence right here. You need to get out because it's still high, but the RSI is low, volume's low, bearish divergence. This is very negative. So I ended up getting out at 1,100 shares, 66 cents. Sold it at 61 cents. I took a $120 loss. So on today, the day alone, I'm down $100. And you know what? It sucks, but my max loss for the day is 150. I didn't want to push myself any further. There was some good runners, but sometimes you just gotta know when to say no. All right, so that's really it. Like, you guys, you got to keep your emotions stable. You got to understand, okay, keep calm. Don't force anything. There's so many trades out there, and just save your money for those moments when you get those good breakouts. So you can see GNC is taking off right now. 482, if I entered at that point, that would have been amazing. But obviously, I'm not going to take the trade right now because I'm making this video. So also, yeah, just just scan through the scanners. One thing, when you're looking at pre-market, you don't want the volume to be extremely high, like I said. And you don't want the pre-market highs to be way off. So let's say the pre-market high is 450, and now you're looking at okay, so let me go to Mara, for example. Mara. I wanted to trade this because you could see, like, this is pre-market. It was doing at 830, had a huge run-up, and it hit a high of 430. I was like, wow. Like, this looks like it's going to squeeze up because it's on blockchain news and all this kind of stuff. But what ended up happening was around 9 o'clock, it sold off. I got rid of that. Like, that's what? Almost 30 cents off its highs. To me, I'm going to say, okay, if it comes close or breaks pre-market highs, I'm going to enter. If it breaks 335, 336, 337, I'm going to get in. I'm going to buy it. Manage my risk. Position myself accordingly. You don't want to take too big a size or you're not going to think straight. Some people think, okay, let me take 1,000, 2,000, 3,000 shares when they don't have that type of capital to do that. So they make horrible decisions and their losses are out of whack. So this is one stock you would not trade pre-market. You don't want to see stocks like that are coming up and going down, and they're selling off because it's showing people are selling their positions. There's weak hands in the stock. The morning is going to end off really bad. So you want to stay away from that. Let me see like any other stocks that did that. I think SPI also did that. It sold off right in the morning. Yeah, so you could see, okay, pre-market, curling up, came up 150, but now we're opening at 126. Now you would be like, okay, if it tests 150 or breaks 150, then I'll enter. As you can see throughout the day, it's starting to curl back up. But if you're entering here and you're taking like 600, 700, 1,000 share position, and you enter at 127 and you're down at $1.03, like you're down $300. Like that's sucky right in the morning, right? Let's see. I think also Icon did this. I'm not sure. Icon didn't do it. What about Oaks? Okay, so Oaks. So you can see here, like I said, pre-market ran up before it opened, ran down. I would not take a position in this stock. Why? Because, like I said, it's way off the pre-market highs. It's going to sell off into the morning. What you could do is wait for the first 5-minute candle to make a new high. So if this candle right here makes a new high, first 5-minute candle, which it did, it tested here. This one broke through. Now we're higher than the open. So I would take a position here. I would take it right at what point was this? 352. The break of the $0.50. So now look at. Let's put it all together. We have the break of the $0.50, 350. We have the break of the VWAP. We have increasing volume. RSI is slowly increasing down here. And it broke the high of the first candle that came out of the open. You put it all together and it puts odds on your side, right? So you could use the strategy, wait for the first 5-minute candle to make a new high. You could use, if a stock is surging, you don't have to hop in right away. You can scalp it 20, 30 cents. Depends on the volume. Really need to understand the volume, the catalyst, the price action, the psychology behind it, everything, right? Put it all together. See if it's holding the VWAP. Is it breaking the VWAP? And all those type of levels. Also, level 2 is level 2 stacking. How fast are the asks being bought up? What's going on? You really want to understand. So, yeah, that's what I really wanted to talk about. And, yeah, so, guys, seriously, take it serious. Take it easy. Don't rush anything. Don't force anything. This is not get rich quick. You know, anyone who gets rich quick, it just, the faster it comes down. So, take the time, build your fundamental background, build the foundation that you can grow off, and eventually everything that you've been working for will come. Just take your time, take it easy. Never get discouraged from a small loss or a big loss. It's all about if you're serious enough about it and you see yourself doing this. Because I just look at it like this. I see people making $50,000, $60,000, $70,000 a year, right? And they are going through the stresses. They're going through money problems. They're going through this. They're going through that. And I see these traders. I see traders sitting there at their computer desk for up to an hour, maybe, making $2,000, $3,000 a day, making $60,000 in a week, in 2 weeks, in a month. Yeah, that's a little bit far ahead for I guess an amateur or intermediate trader. But the thing is, it is reality. So these guys are making what people make in 1 year in 1 week, in 2 weeks, or 1 month. Imagine what you could do for the rest of your time. No matter if this takes you 2 years, 3 years to get the hang of, no matter if you lost $500, $1,000, $2,000, $3,000, $5,000, $10,000, $20,000, $30,000, if you're serious enough, it will pay off in the end. You just have to take it serious. Take it serious. You'll get serious results. You don't have to be discouraged about your losses. You don't have to talk about your losses. Just take it serious, keep it low, and evaluate where you went wrong, and just grow off that. The thing is, as traders, we continue to make the same mistake because it's personality deficiencies, and all our personality deficiencies, they show up on the market. If we're greedy, or we get scared, or we don't know how to act under pressure. It all comes out. So we just have to work on it. We have to develop ourselves until one day we know the psychology. We know how to put odds on our side. We know how to perfectly manage our risk, how to perfectly position ourselves in the stock, the perfect breakouts. Like, obviously, it's not 100%, but you can increase the odds from just learning every single day. Trade, learn, grow, be disciplined, stay dedicated. That's all I got to say. So keep killing it, guys.